Good afternoon, everyone. It's 25 past 3 here on Friday, the 15th of January. And we're looking at, as always, at the start of these VectorVest USA, which is running and has been running now for 55 minutes. As you can see, the declines significantly ahead of that of the advances today, and the Dow is off 360 points, and the S&P off as well. We'll look at that in a second. As you can see, intraday, this can change, but intraday, as we go into the day, the short-term trend on VectorVest is down, the underlying trend is up. That can change intraday, folks, and all of the longer-term measures of the trend on VectorVest are up, and the advice is quite simple at the moment. Keep your hands in your pocket, or sit on them, or do everything you have to do to do nothing. Doing nothing, as I keep telling the VectorVest members, is much more difficult than it would seem. I have the VectorVest composite loaded. Yeah, here we are. That's the VectorVest composite of the US. And I've loaded the medium-term market timing signals, the so-called DEW. And the DEW is still positive, and this signal has got a very good track record of finding turning points in a market that's very oversold, such as the signal we got on the 6th of April, or very overbought, which is the situation at the moment with the market timing indicator sitting up at 1.66, folks, and the buy-sell ratio at above 10. So we've got a mega overbought market. As you can see, the price has been rising, the MTI has been falling. No divergence on the buy-sell ratio. There was, but the market sort of kicked it into touch a couple of weeks ago. How long can this last? Of course, this divergence can run on for months on end. Nevertheless, it is a warning, and as I've said 1,000 times before, folks, this time will not be different. So I think that if we were to get a DEW signal down, which we're still a way off, if that were to print, then that signal needs to be taken quite seriously indeed. The VectorVest customers will know what I call the sequence of the turn, where clearly the short-term trend will turn before the longer-term trend. At the moment, we've only got an intraday turn down, so there's nothing to worry about at the moment. If we now have a look at my own market, the S&P, you can see that's the pullback we've had today after a very sideways week. We had an inside day. Now, somebody asked me what an inside day was, and an inside day is nothing more than a day where the high and the low is in fact inside the high and the low of the previous day. So it's a volatility contraction pattern, and we had, apart from that little this low on this day, we had 1, 2, 3, 4 of those inside this big bar up, which was last Friday's close, and we've broken out of that consolidation this afternoon. I thought maybe we would find support at that 3769 level. That hasn't happened, and we're pulling back now into the zone between the 21 and the 55. Looks to me as if the next support will come in. This level can still hold, but the next formal support on the chart would be around 3700, which is not the end of the world. Let's sometimes this 21-day moving average, the algos use that as a support level, but nevertheless, as I said earlier, just sit in your hands today, watch positions very carefully indeed, and if this signal were to confirm by an end of day close, that's the first of the VectorVest sales signals that have kicked in, preceded by this divergence between the price and the momentum indicator. So a time to be careful. Nothing to be done yet, just a time to be careful. I think I also loaded the intraday data. That's the SPX, that's the open. This is a 5-minute chart. That's the open, and although this technique would have got a hiding during the week, many people still trade the opening range, and I found the opening 15-minute range is a good place, and when the market broke, it went very nicely indeed. The technique, the opening range technique, has been around since markets were created, folks. If there's a day with energy like today, then they call it reasonably well. During the course of this week, where the market was stuck in that inside pattern, then they got a hiding. Okay, so don't look for a hit rate on them much more than 50%, but you can make an awful lot of money with them if you make 3 or 4 times more when you're right than you lose when you're wrong. 5 times 3 is 15, 5 times 1 is 5, so therefore on 10 trades you have a positive expectancy system. So let's I think we'll find support on this, but it may take into the second half of the day or next week, and clearly this $2 trillion, or is it $5 trillion? When we're talking trillion, what's a trillion between friends? But the stimulus package will come, and I would suspect that markets will in fact become much more invigorated, should I say, when that has hit the statute book. So let's have a look at my little portfolio, which I'm reasonably happy with. It's let's make sure that that's streamed, and there we are, folks. Given back quite a bit today. The one that has moved up is this PLTR. We'll have a look at all of these now. Let's see very quickly indeed, and let's chart these. There we are. That's apps. And apps had a cracking couple of days, and it's now coming back to my stop loss. As you know, the strategy that I teach is that when you've made as much as you've risked, my entry point was just above that red day. When you've made as much with a stop loss under that low, when you've made as much as you've risked, take a little bit, get your stop to entry, and then if the second half goes, it goes. Clearly there was a great deal of overhead resistance at the 60 level, so I've taken a little bit of that. My stop's at entry, and with any luck I'm not going to get stopped out. So a little technique for you if you're interested. This was something that a scalper told me a very long time ago, a short-term trader. If you see a trend line like so, from there to there, and the trend line breaks, for a short-term scalping type target, go from that low to that high. Measure that. Okay, I haven't done that very well, but I think you can see what I mean. From that high to that low. Subtract the high from the low, or the low from the high, should I say. When you get that distance, add it to the breakout point, and that produces a short-term target for you. So if you're interested in trading over a couple of days, you'll find that that produces exceptionally good targets that are in fact quite self-fulfilling, because there's quite a few institutional traders using the same thing. So if you want to get out quick, clearly the old high was in the same place. I found it a useful technique over the years. Okay, so for what it's worth. Let's go on a little bit. That is PLTR, and the same technique, folks, would suggest that this bit is a target on the upside. So if you take that high, just go straight up from the lowest bar, that high minus the low, add it to the breakout point, that'll work out a short-term target. The chap that in fact showed me this, it's a generation ago, he said that the darn thing must break and go straight away. So he would certainly today have a stop loss under today's low, and if it goes, it goes. If it doesn't go, remember, risk and reward are paramount. If you don't have 2 to 1, maybe 2.5 to 1, it's going to be very difficult to make money in markets, folks. If you're just making what you're risking, very difficult to get ahead, because you've got to be right 9 or 8 or 9 times out of 10 to make some money, and that's quite difficult to do. Always easy to do in hindsight, but in real markets quite difficult to do. So that's this looks good to me, it really does. That level was a 78% retracement of this. That's Peloton, and I bought into just down here somewhere. As you can see, the 3 waves back, and classic price action on Peloton, and there is, I think, an old top back here somewhere. Yeah, there we are, that old top. So that's what I call a sweet spot, and it's stops at entry, and I'm doing my best to keep my sweaty little hands off it. That's SE. Now SE is a model trade, and I should have banked it. I meant to bank it yesterday. I'm going to bank it straight after this particular episode. If I put on the 55-day moving average, there's the moving averages, pull back to that old top once, and then goes back again, runs the stop loss, and then moves up the park beautifully. That's what I call a spring, and it's my favorite trading technique. The reason that little blue thing is sitting there is that that is a 1.618 extension of the pullback, and that's where the darn thing has gone to. So I should have taken profits up there yesterday. I was sleeping, I was looking at it, and I shall try and do that today. The trend looks good, but short-term overbought here, and should have been banked up there. That's Ingersoll Rand, still doing absolutely nothing. That's Apple. I think I'm $1 into the money after a month. And AMD, folks, I'm underwater. I've given it the benefit of the doubt. It looks to me as if these levels and this level are important, so I've given that the benefit of the doubt. We shall see whether that slackness pays off or not. And that's the S&P that we looked at a second ago. So that's what I've been up to. I'm certainly not going to do anything apart from manage stops, and I'm actually going to bank that profit in SE just after I do this video. Okay, so if we look at the UK, we have a situation in the UK where we have been down. The short-term trend is down for the last couple of days, and remember, this is an end of day close, so this will not change. We have a huge buy-sell ratio. We have a MTI that's on the high side, and it's been higher. If I have a look now at the market timing graph, that's what the market has done. It's been great, and as you can see, the Vector-based composite significantly stronger than the FTSE 100. That where have I done? That has got nowhere near the February high. So and if I put on the MTI, we can see that the MTI has got the similar divergence color that you can see. Price is rising up, this is falling, and put on the buy-sell ratio, make it green, dark green, there we go, and as you can see, this showing no divergence at all. The price is rising, this is falling. If I put on my DEW signal, the DEW signal is strongly up, and I think that as I suggested in the US, that if we get a DEW situation in a market that's showing this level of mega overbought, that needs to be taken quite seriously. That's still down the track. Only the shortest measure of the trend has turned down, so I'm quite happy to hold positions. And some of the positions that I've been holding, they haven't done much, I know, but I'm trying to run a long-term investing portfolio here, not a trading portfolio. Plus 500 is the one that needs, that's what I'm holding. I've resorted by RT, and plus 500 is at the bottom of the list. Plus 500 has always given me grief for some reason. I don't know why. It fundamentally, it looks fine. Look at the earnings growing here. I'll take the volume off, it's not saying that much, and I'll take off earnings per share as well, because we've looked at that. This is the line in the sand, folks, and it's gone sideways here now for wave 1, 2, 3, 4 and 5. There's normally 5 waves in one of these patterns. As you can see, there's resistance that became support, and I'm giving it the benefit of the doubt, hoping that this level is going to hold, that this is a liquidity building exercise here. I may be slack. Certainly if it closes down below these levels, then it has to go. It's as simple as that. I'm reasonably happy with the rest. I think that those of you that are holding Games Workshop, that nice up day yesterday, as you can see, it came right to the 55-day moving average. That's why I put these in the chart. And of course there is an old high across here as well. We had a savage down day, we have a doji, we've got an up day, and this bar, folks, this big red bar down, if this bar breaks to the upside, I think we'll get a breakout here. So I bought a few more down there. I didn't buy any here. I was tempted to buy some, but I'm vastly overweight on the darn thing, which is a cracking problem to have. But I would suspect that we're going to see a little bit of clumsiness up here. Markets normally break on the 4th attempt, so I wouldn't be at all surprised to see it go up, mess around, pull back a little bit again, and have another go. It'll break on the 4th attempt. It'll be nice if it broke on the 3rd attempt, but normally they break on the 4th attempt. So I have another watch list in the UK, and I hate it when I get cluttered here. And I'm going to go to, that's my spec watch list, and some of these are getting very interesting, folks. GY, I'm going to chart these because they are starting, as I say, to get quite interesting. And clearly there's some big companies in here. HSBC could hardly be classed, I suppose, as a spec. Nevertheless, it hasn't performed that well. This is a gaming stock, just listed. And as you can see, it broke here. I spoke about it a couple of Monday afternoons ago. I was alerted to this by, we've got such a great group of investors around the country, and I was alerted to them by one of them, and it's in a really good sector at the minute that's flying. And if we put on earnings per share, we can see this earnings per share, as low as it's been listed for only a few weeks, earnings per share from £1.10 to £1.50, and that's a good sign. Let's look at volume, and we can see that we have to blow it up a little bit, but you can see these up days, great volume, that day great volume, so that looks particularly good to me. Now this is IAG, which is British Airways. It's very fashionable to knock British Airways, but I've been flying with them back and forward to South Africa for once a month for 30 years, maybe 35 years, and I've never had a bad flight in terms of service, and we haven't hit a mountain yet. If I'm going to earnings per share is awful. They're not flying, but there is that's the vaccine day. That was the Pfizer day. But we've got the mother of all cup and handle patterns starting in IAG to here, and that's the trend line. We'll see in a moment HSB saying the same thing. So if the vaccine works, folks, and I read yesterday, in fact, in the Telegraph or the Times, that the advance booking for holidays mid-year towards the end of the year is running well ahead of a normal year, so people just want to get away, I suppose. Can't blame them. If this should break up here, then the first target, and pretty much the same as I suggested with the trend line, would be this maximum distance between the trend line and the price added to that, and that looks to me as if that's going to take it up to 250 odd, something like that. That's AAZ. I think that this share is markedly undervalued, folks, and it looks to me technically exceptionally strong as well. It is a gold stock. It's pulling gold out of the ground in some godforsaken place, and there was a war there recently, so not for the faint-hearted. That's HSBC. I think probably a better example of a cup and handle pattern than an IAG, because it's not trending down. The trend would seem to have turned. This is making a very solid rising bottom. Some of the cup and handle patterns that I see quoted these days are incredibly agricultural looking, in other words noisy, and you've got to have 2 or 3 glasses of scotch in the evening to actually see the darn things. But this is just a beautiful cup and handle pattern. And if we actually look a little bit further, you see this big up day happened on rising volume. It's now pulling sideways in what my technician's head sees as a bull flag on falling volume. Again, if this pushes up, then this bit, that's 3 to 4, there should be a pound in that would take it to £5, and with any luck that's a turning point there. So that's something for you to look out. So this is 4D, pharmaceutical company, not for everybody, and I came off this Fibonacci level, pushing up in this little flag pattern. Let's have a look again. Cracking volume there, and see how it was accumulated at the fib pattern. As it moved up, good volume, pulling back. That's it seems to have broken out now of this little flag pattern. This is stem prop. And it's not listed that long, but it's pushing up again. This should be repeated. Very illiquid, but pays an exceptionally good dividend. Have a look at it, do your own research. Bushveld Minerals. And Bushveld Minerals, folks, we've got to go back for a little while. This is a vanadium miner. I know the mine reasonably well. This is used in battery technology, and as we can see, there's volume going in at the tail end here on this weekly chart. So I suspect it needs to pull back a little bit, but I'm certainly watching Bushveld, and there's that volume going in, and now in the last few days we can see a pullback on virtually no volume. That's a good sign. It could easily pull back to 16 pence here, which would be the 55 period moving average. This is a small little oil miner. Couldn't be smaller, in fact. So if you like the look of oil, huge accumulation going in. I think that's probably the most speculative of all of the shares that I've looked at today. And well, maybe I'm wrong. This is another mining play. It's a copper play in the US. It's not making any money. It's losing money, but it has got a cracking ore body in a politically very stable environment in the US. So that's the push up. Pull back 1, 2, 3, 4, and 5, textbook, and it breaks out in big volume here, folks. So there's somebody buying it. We look at the 3-month chart. Look at this huge volume going into it. 800,000 shares going into it. Okay, at 50 pence each. And it's now charting an inside period. You see all these bars are inside this one, and a breakout in this, folks, and this thing can go. Alright, so and the last one is a Vector. We've got to go to a 5-year chart again, and we can see that there is a huge volume and pullbacks here, and again that is a classic Wyckoff spring, and it means that somewhere down around this area, if that 100, the pound level is in fact respected, that this thing can go to heaven here. All of these shares are highly speculative. Maybe you would argue that IAG and HSBC are not. Certainly that little oil company and Avacta, which is in drugs and whatever, you can't get much more speculative than that. Nevertheless, I like the look of them, and with a little bit of confirmation, I should be buying some of them. I haven't bought any of these as yet, folks. I certainly shout long and hard when it's time to buy them. We go back to the US market now, and we can see, let's go home, nothing much has changed. The Dow is down not as much as it was 10 minutes ago before I started, and the S&P is off its lows at that 21 day moving average. The algos use 20 or 21 and it seems to have come off there. If we have a look at the intraday data, now I've closed the intraday data, but let's see what can happen in the second half of the day. As always, I'll be back on Monday afternoon at 1:30. Look forward to seeing you all. Those of you that are not VectivS members, then give me an email, david.paul@vectivs.com, and I'll send you a complimentary invite. And next Wednesday on the 20th, we've got our first UK national user group, which I've called the Streetwise Investors Club, and that'll be meeting next Wednesday the 20th for the first time at 6:30. And it's a great pleasure to run it with the one and only Susan Thornborough, who'll be in fact chairing the meeting. I look forward to seeing you all on Monday, folks. I hope this helped. Thank you.